Which payout option gives you the highest monthly check for life from your single premium immediate annuity, or SPIA? And what may that mean for your heirs? Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well. Quite a few of you have reached out to us recently to get more clarity about the different payout options that you can choose from when you purchase a single premium immediate annuity, a SPIA for short. So with that in mind, here are the 3 topics I'll be covering in this week's annuity discussion. 1. What are the most common guaranteed lifetime income payout options for single premium immediate annuities, or SPIAs? And which one might give you the highest monthly check? 2. How might age and gender influence your monthly SPIA check under different payout options? In this section, we'll show you some illustrative sample numbers by age and gender to give you a feeling for what your monthly check might look like if you were to buy a SPIA from one of the best-rated insurance companies on the market. And 3, what are some key factors to consider before purchasing a SPIA? And as a friendly reminder, if you're interested in our May I-bond rate projection and this month's 5-year tips auction, that video will be out this weekend. So stay tuned for that. This should give everyone who's interested enough time to contemplate whether to buy their I-bonds in April versus May. For today, let's get back to payout options for SPIAs, which one pays the most, and whether that may or may not be right for you. Let's dive in now, folks. What are the most common guaranteed lifetime income payout options for single premium immediate annuities, or SPIAs? And which one might give you the highest monthly check? As a reminder, with a SPIA, you typically make one single large upfront payment to the insurance company, and very shortly after your payment, sometimes as soon as the end of the month, the insurance company will begin to pay you a guaranteed monthly income for the rest of your life. Quarterly and annual payments may also be possible, but monthly payments are generally what most SPIA buyers prefer. So, let's go through the 5 most common lifetime payout options that you can choose for your single premium immediate annuity. In this column, we have the payout option. And in the next columns, we show you whether you receive guaranteed income for life and the relative monthly payment level across the different payout options. Here, we talk about what happens if you pass away before your premium has been fully paid out to you. And this last column shows you who might want to choose this specific payout option. The first payout option is life only, also sometimes referred to as straight life. Life only guarantees you income for life, and the relative monthly payment level is usually the highest when compared to the other payout options that we'll be covering shortly. And the reason that the relative monthly payment level is usually the highest for the life only payout option is because if you pass away before your premium has been fully paid out to you, payments stop immediately, and the insurance company keeps any unused premium. Your beneficiaries or heirs receive nothing, basically. And yes, this does mean that if you buy a $100,000 SPIA with a life-only payout option today, and you pass away after receiving only your first annuity check a month later, the insurance company keeps your entire $100,000 premium, less that first monthly annuity check that it already sent you. You might want to choose the life-only payout option if you want maximum income and have no strong need to leave money to your heirs. The second payout option is life with installment refund, which guarantees you income for life as well, but at a relative monthly payment level that is usually lower than the first payout option, life only, because under the life with installment refund payout option, if you pass away before your premium has been fully paid out to you, your beneficiaries receive the unused premium that was not paid out to you as continued monthly payments over time. So, using the example from earlier, if you buy a $100,000 SPIA with a life with installment refund option and you pass away after receiving your first annuity check next month, the insurance company would keep sending monthly checks to your beneficiaries until the unused premium is completely returned to them. Compare this to the first payout option, life only, where the insurance company keeps any unused premium and your beneficiaries get nothing in return. In other words, there may be a death benefit for your beneficiaries on a SPIA with a life with installment refund payout option, but not under life only. You might want to choose the life with installment refund payout option if you want your heirs to receive any leftover principal that you've paid in back as ongoing income. The third payout option is life with cash refund, also sometimes referred to as single life with cash refund or a life annuity with cash refund. Life with cash refund also guarantees you income for life, but the relative monthly payment level is usually lower than for payout options 1 and 2 that we just discussed. The key difference here is that under life with cash refund, your beneficiaries receive the unused premium that was not paid out to you almost immediately as a lump sum refund, whereas with payout option 2, life with installment refund, your beneficiaries receive the return of capital stretched out over time, so to speak, as continued monthly payments. This lump sum refund means that the insurance company cannot hold onto portions of the unused premium and invest that money for longer and potentially at higher rates, like it could do under payout option 2, life with installment refund. This is why a life with cash refund payout option will generally give you a smaller monthly check than a life with installment refund payout option. You might want to choose the life with cash refund if you want your heirs to get any leftover principal almost immediately in one single payment, rather than as ongoing income over time. The fourth payout option is life with period certain. This payout option again guarantees you an income for life, but it also guarantees income for a specific minimum number of years, regardless of when you might pass away. Guaranteed income for a minimum of 10 or 20 years is typically the most common for the life with period certain option, but you may be able to choose 5 years, 15 years, or some other term altogether, depending on which insurance company you buy your SPIA from. What this means is that if you pass away before the end of the minimum guarantee period, your beneficiaries will keep getting the payments that you would have received for the rest of the guaranteed period. So, for example, if you buy a $100,000 SPIA and your payout option is life with a 10-year period certain, if you pass away in year 5 of your 10-year minimum guaranteed period, your beneficiaries would continue to receive your monthly annuity checks for 5 more years until the 10-year minimum guaranteed period is over. After the 10-year minimum guaranteed period is over, though, those monthly annuity checks to your beneficiaries would stop. If, on the other hand, you live longer than 10 years, meaning after the 10-year minimum guarantee period is over, you would still continue to receive your monthly annuity checks for as long as you live. But upon your death, those payments would end, with nothing further going to your beneficiaries. And because this question comes up often, one of the key differences between option 2, life with installment refund, and option 4, life with period certain, is this. If you pass away earlier than expected with option 2, life with installment refund, the monthly payments to your beneficiaries will stop as soon as the unused premium is paid out. Your beneficiaries will never receive more than the unused premium. Whereas with option 4, life with period certain, if you pass away earlier than expected, the monthly payments to your beneficiaries will only stop after the minimum guaranteed period is over. And in the end, what your beneficiaries get may or may not be the same as the unused premium. You just don't know beforehand, as this will depend on a number of factors, such as whether you live close to the end of the period certain, how long your period certain is, etc. And similarly, the relative monthly payment level also depends on how long your period certain is. For example, it may usually be less than options 2 and 3 if you opt for life with a 20-year period certain, but more if you choose life with a 5 or 10-year period certain, because you're getting payments over a shorter guaranteed minimum number of years. So, for example, if you're a 75-year-old male investing in a $100,000 SPIA at the time of this taping on April 17th from one of the highest rated insurance companies on the market, under life with a 10-year period certain, your monthly annuity check might be about $736, whereas under the life with cash refund option, your monthly annuity check might only be about $710. For a 75-year-old female buying the same SPIA right now under life with a 10-year period certain, your monthly annuity check might be about $697, whereas under the life with cash refund option, your monthly annuity check might only be about $674. If you're considering a SPIA either for guaranteed lifetime income purposes, as we're discussing today, or to delay claiming your Social Security checks, as we've discussed in this recent video, email us at jennifer@diamondnestegg.com so that we can connect you with our trusted annuity specialists who can help you figure out what the best payout option might be for you and what those monthly checks could look like under different scenarios. So, life with period certain. You might want to choose this payout option if you want payments for a guaranteed minimum number of years, either for yourself or for your heirs if you pass away early. Moving on now to the fifth option, which is joint life with cash refund. This is usually the most common option amongst couples because it guarantees income for both lives, meaning for as long as either spouse is alive. However, it also means that the relative monthly payment level is usually the lowest when compared to the other four payout options on this table because the insurance company has to plan for a longer average payout period than with these single life options. Some insurance companies will allow you to choose a survivor benefit percentage, for example, between 50% and 100%. Say you choose 75%. This means that when the first spouse passes away, the surviving spouse's monthly payment would only be 75% of what it was previously. So, for illustration purposes, if the monthly annuity check is $1,000 when the both of you are alive, it would go down to $750 when the first spouse passes away, and would continue at that level for the rest of the second spouse's life. Plus, with joint life with cash refund, your beneficiaries receive any unused premium that was not paid out to you or your spouse as a lump sum after both of you pass away. You might want to choose this option if you want survivor protection for your spouse and your heirs to get any leftover principal back in one single payment. So there you have it, our handy dandy table of the 5 most common payout options for your SPIA if guaranteed lifetime income is what you're after. Now, let's move on to the next part of today's discussion to see what the illustrative numbers might potentially look like under different scenarios. How might age and gender influence your monthly SPIA check under different payout options? As promised, we'll show you some illustrative sample numbers by age and gender in this section to give you a feeling for what your monthly check might look like if you were to buy a SPIA from one of the best rated insurance companies on the market. Let's assume that you're planning on investing $100,000 into a SPIA from one of the highest rated or safest insurance companies in the market. Here are some illustrative sample SPIA payouts for life. In this column, we have the 5 most common lifetime payout options that we just discussed. Life only or straight life, life with installment refund, life with cash refund, which is the same as single life with cash refund, life with a 10 or 20-year period certain, and joint life with cash refund. And in this section, we'll show you some illustrations for what the monthly income for life might be if the age of issuance is 60, 65, 70, or 75, and depending on whether you're male or female. So, if you're male and your age at issuance of the SPIA is 60 at the time of this taping on April 17th, 2026, under a life-only payout option, your monthly income might be about $550 for the rest of your life. As we mentioned earlier, a life-only payout option is usually the highest amongst the other payout options on this list, because if you pass away before your premium has been fully paid out to you, payments stop immediately, and the insurance company keeps any unused premium. Your beneficiaries or heirs receive nothing, basically. Under life with installment refund, your monthly income might be a bit lower at $538 because any unused premium is returned to your beneficiaries as continued monthly payments over time. Under life with cash refund, your monthly income might be even lower at $531 because any unused premium is returned to your beneficiaries almost immediately as a single one-time payment rather than in installments. Under life with a 10-year period certain, your monthly income might be $542, so a bit lower than under life only, but higher than under life with installment refund and life with cash refund. Under life with a 20-year period certain, your monthly income might be $524, so lower than all the payout options that we've just discussed because of the longer 20-year guaranteed minimum payment period. Generally speaking, and all else being equal, the longer your period certain is, the lower your monthly check might be, which also means the longer your period certain is, the more likely that your payout will be lower than if you had chosen life with installment refund or life with cash refund. And of course, a joint life with cash refund pays the least relative to all the other payout options on this list at potentially $493 monthly in this illustration because the payment is made so long as one spouse is still alive. For the joint life with cash refund payout option, we assume that both spouses are the same age for the sake of simplicity. So if you're a 60-year-old male buying a SPIA with a joint life with cash refund payout option, we assume that your wife is also 60 years old. And if you're a 60-year-old female buying a SPIA with a joint life with cash refund payout option, we assume that your husband is also 60 years old, meaning that this number is the same regardless of gender. There are 3 points to note about the sample SPIA payouts for life on this table. First, the older you are at the age of issuance, the higher your guaranteed monthly income for life will generally be, because the greater the likelihood that the insurance company will have to pay for a shorter period of time. Second, all else being equal, the monthly check that a man will get from his SPIA will typically be higher than that for a woman, because women tend to live longer than men on average. So the insurance company assumes that they will usually have to send out those monthly checks longer for women than for men. Third, keep in mind that these sample rates and numbers are for illustrative purposes only and subject to change. Your actual rates may depend on a number of other factors and will only be fixed when you sign your annuity contract. If you're interested in what your personal rates and payouts might look like at the time you're watching this video, email us at jennifer@diamondnestegg.com so that we can connect you with our trusted annuity specialist. Right. Now that you know how big your SPIA check might look like under different payout options, depending on your age and gender, let's move on to the next part of today's discussion. What are some key factors to consider before purchasing a SPIA? Now, SPIAs, like all other annuities, are not for everyone. For example, SPIAs may not be for you if you're still a long way from retirement, if you're looking for significant growth in your portfolio, or if you already have a company pension and or Social Security check or sizable nest egg that you can depend on for the rest of your life. For the right investor, though, there's no other product out there that you can use to create your own personal pension that is guaranteed for life. There are 3 main potential advantages of purchasing a SPIA. First, and probably the most important point, is that a SPIA helps protect against longevity risk. Your income is guaranteed for life under all the payout options that we discussed today on this table. Second, the monthly checks from a SPIA are guaranteed, stable, and predictable, and even more so with a highly rated insurance company. Once you've signed your annuity contract, payments don't fluctuate with the ups and downs of the market, helping you to create a floor for your living expenses in retirement. Third, a SPIA may also allow you to invest more opportunistically in the equity side of your portfolio. This does not apply to everyone, but for some SPIA buyers, having their basic ongoing expenses covered every month via their SPIA checks means they may have a bit more wiggle room or appetite to invest in higher yielding products in the rest of their portfolio, for example, than they would otherwise have done. Because as our Diamond NestEgg regulars know, higher returns come with higher risk. And because inflation is a question or concern that we hear about often with fixed annuities, let me make a point here, and this will be more relevant the longer your payout period will be. Yes, some annuities come with inflation riders, but to be very clear, this is not something I generally recommend because based on our experience and what we've seen in the market, these inflation riders are often not cheap. In addition, inflation protection is not the purpose of an annuity, at least not the fixed annuities without fees that we've talked about on our channel up to this point in time. But if you consider your guaranteed monthly checks from an annuity as your stable baseline, you might then use the rest of your portfolio to stay invested in equities or tips, or maybe even REITs or other investments that may help you to balance out the inflation risk overall. And some of these may even generate some additional growth as well. Or as we tell our clients, build your base and grow the rest, what we now call our base and boost strategy. Many thanks to Jason B for this catchier name that flows off the tongue a bit better. Basically, in my mind, you should buy an annuity for what it's designed to do. A single premium immediate annuity, or SPIA, is primarily designed to guarantee you a fixed predictable income for life. Now, you should know that a SPIA may also be used to generate a fixed income for a specific period of time only. We didn't talk about this option today, but it might be potentially interesting if you're planning to use your SPIA to bridge the gap to Social Security and get a higher monthly Social Security check for life, for example. I linked the video that we talked about this topic on below for your convenience. A multi-year guaranteed annuity, or MYGA, is designed to protect your principal while offering higher rates than treasuries and or CDs usually. A fixed indexed annuity, or FIA, is again designed to protect your principal while allowing for market participation up to a certain cap. And a qualified longevity annuity contract, a QLAC, is designed to give you a lifetime income stream in your much later years while helping you defer RMDs and taxes. Buy these annuities for these reasons here that they were created for, and buy I-bonds, Treasury inflation protected securities, TIPS, and stocks for inflation protection. Our next video with the May I-bond rate projection and this month's 5-year TIPS auction will be out this weekend. So, inflation protection and the best way to achieve it is something that I personally feel very strongly about. That said, everyone's financial journey is different, and you may feel differently. Ultimately, the decision is yours to make based on your personal situation. And always make sure that you check the financial strength of the insurance company that you're buying your SPIA from, meaning what is their credit rating. Remember that all else being equal, the higher the credit rating, the stronger the company will usually be financially, and the safer it is, which means the lower your monthly checks will most likely be. For a fixed income community, this is similar to bonds, where the higher the credit rating of the bond issuer, the lower the interest rate you will typically get on that company's bonds. Whereas the lower the credit rating, the more the bond issuer, like the insurance company, has to pay a risk premium to entice customers to buy. Lower rated insurance companies have to basically pay more of a risk premium, just like lower rated bond issuers. And that's why we normally only work with the most highly rated insurance companies, both personally and professionally. The way we see it, annuities provide safety and predictability. If we want to take on risk, we'll do that in other parts of our portfolio and get the higher returns there, as I touched upon already, and not via a lower rated insurance company, which may put the safety and predictability of our annuities and other insurance products at risk. This is important for all insurance products in our mind, but in particular with a SPIA, where the transaction is irreversible after the 30-day free look period. You cannot break a SPIA early under any circumstances. And in fact, the guaranteed monthly checks for life, or in some cases for a specific period of time, are what you can depend on for your livelihood. Of course, state guarantee associations will protect you up to certain limits if your insurance company were to ever go bankrupt and not be able to pay you the monthly checks due to you. But remember that this is a backstop. It is not a perfect substitution for a financially strong, highly rated insurance company. As always, email us at jennifer@diamondnestegg.com if you're interested in getting connected with our trusted annuity specialist to see what the latest rates and payouts look like, because there's no one-size-fits-all cookie-cutter annuity solution. Any annuity you buy should be customized to your personal situation. All right, Diamond NestEgg members, super savers, and course fans, I hope you enjoyed today's video and learned something new. And see you again very soon with more brand new wealth-building content for your financial journey.